Welcome back to the Real Estate 401k show. I'm your host, Mike Weinstein, alongside Justin Frederick. In just weird seeing you in a hat.
I know, right?
Doing
I like
the
it.
show. Yeah, we'll talk later on about professionalism.
Have
And
you
Ryan
seen your
Gerdes.
shirt?
Yeah.
Did you take that out of your car? Was that in the trunk?
Well, I don't know. Yeah, I mean, Justin's the only guy I know that goes onto a podcast with a hat on.
Straight from the golf course. All right, you're going to want to text the word REFI to 623-AZ-RECON. That's the word REFI to 623-AZ-RECON. All right, Justin. So a couple weeks ago, the big news was that the Feds lowered rates by basically a half a point.
Mm-hmm.
A lot of confusion because what a lot of people assume is then that means mortgage rates drop by a half a point. And there's really a difference between the two. And as a matter of fact, once the Feds made the announcement, we saw interest rates for mortgages tick up just a tad. Yeah. Explain that to us and what the difference is and why when the Feds lower the rate, why it doesn't automatically equate to mortgage rates.
Yeah, mortgage rates work off of long-term notes. So treasury bonds, mortgage-backed securities. Now, the Fed rate will slowly impact mortgage rates, but they don't tie together. And that was you wouldn't believe the amount of phone calls I got the day, and like right at 11:30 when he was talking. It was a busy day, but the Fed rate is what banks borrow against. That's what you're going to see as your prime rate. So what works off of the prime rate is going to be your home equity lines of credit, your credit cards, and what banks borrow against.
So there's no like a dude behind the curtain, no Oz behind the curtain that says, okay, I am going to lower mortgage rates by X percent.
I'll tell you, it'd be freaking awesome if that was the case.
I'll do it. I'm looking for a new job.
I vote for Justin.
Okay, so then where are we at right now?
Yeah.
Because the topic of discussion is refinances. When should we be considering doing a refi? When should we even just start the process, reaching out to you and get that ball rolling? What is that magic equation for people to understand?
So actually, now's the time. I just read an article from a chief economist of NAR, basically was stating that all the Fed rate decreases that are going to be happening through the end of the year, which they're projecting another quarter in November and another quarter in December. So they're saying these are already baked into mortgage rates, and we've seen a massive decline. We've seen a 150 basis point decline since July with mortgage rates. So it's a really good time to refinance. We're finally back into some really good numbers. We got VAs in the low fives. We got FHAs in the mid fives. We got conventional loans in the low sixes, and you can even buy it down to get into the high fives and conventional. But now's the time. So basically, what the chief economist is saying is there may be some slight changes in rates, but it's not going to be dramatic. The election can cause a lot lot of variables within the market.
What election are you talking about?
I've never heard anyone bring that up.
What's
before.
going on?
Yeah.
Are we in an election cycle? I didn't know.
So my advice to my clients is let's get this done before the election. There may be another point that it might be good for refinances, and we're kind of thinking summer of 2025, but there might not be. So take advantage while you can. We're saving a lot of people money in the ranges from $700 to $100 a month, and it really just depends on what your balance is, what your current interest rate is. But there's a lot of opportunity right now.
All right, and you can get the ball rolling, and at the very least, have a discussion with Justin and his team to examine where your current rate is, whether it's even beneficial or not. But really, to get the ball rolling, we want you to reach out to Justin. All you got to do is text the word REFI to 623-AZ-RECON. That's REFI to AZ Recon.
I want to dig into a little bit more of the specifics on it because you're saying it's a good time to refinance. Well, if you have a 3 in front of your interest rate, it's not a good time to refinance, right?
You'll probably never be doing a refi.
For sure. So let's talk about what's happened over the past year, 2, 3 years. And so at what point does it not make sense to refi as far as what your interest rate is?
So we can't put a number on the interest rate. It's all about recoup time.
Okay.
So I don't like the hey, you got to drop a minimum of 1%. That's such a standard rule out there that people live by. But if you have a $600,000 loan, you might, if we dropped you 0.75%, you might recoup your closing costs in 12 months. You know, it really just depends. And the general rule of thumb that we like to live by is 36 months. We want to recoup your costs within 36 months of the transaction on the refi. Now, you were mentioning 3%, and you don't want to refinance. Well, most people's cases you don't want to refinance. But if you've dug yourself in a hole and you have a lot of credit card debt and you're living month to month, this might be a really good opportunity for you to take a cash out refinance, lower that total monthly nut,
and get rid of the
credit cards. Yeah, you're gonna hit yourself on the interest rate for the mortgage, but you're probably gonna be able to dig yourself out of a pretty big hole if you're in that situation. Now, we're gonna talk about that and we're gonna go through it, and we'll tell you if it makes sense or not. But it's up to you to decide if you want to do it or not. But there is a lot of people out there that they don't want to touch that 3%, but they're just digging themselves deeper and deeper into a hole. And we've seen them. And it's a hard decision, but sometimes you got to make that.
On that note, where do HELOCs come into play? Because if we are seeing more volatility in the market with the Fed rate cuts, as it pertains to HELOCs and credit cards, what's a good rule of thumb for people to have as far as how to use those HELOCs to get out of that bad debt?
Yeah, and a HELOC's a great tool in those cases to get out of those debts. And you just have to find a company that will allow you to take out a HELOC and pay off that debt to keep your debt to income ratios lower. Now, the big problem that we find with the HELOCs and trying to dig people out of a hole is they're already in the hole. And so typically a HELOC requires a much higher credit score to qualify for. So we're typically leaning towards a cash out refinance because most of the time they're not going to qualify for the HELOC.
Okay.
In those cases.
And then are seconds going to be a thing ever again?
Yeah, absolutely.
Or, I mean, I know that we've done them on some of our jumbo products, right? So how is that playing into the whole refinance market as well?
Well, I love HELOCs because HELOCs are going to move down with
not HELOCs, but like permanent seconds.
Permanent seconds are great. They're just higher interest rates. So in a time where Fed rates are going to continue to cut, I love the HELOCs better than the fixed seconds. And the reason why is because as prime moves down, those payments on those HELOCs are going to move down because they're variable rates. So as that prime rate goes down, monthly payments and your rate on your HELOC is going to continue to decline.
Well, everybody's situation is different and everybody's situation is unique. So there's just no cut and dry solution. And that is why you really need to take the time if you're considering doing a refinance and or wondering whether you are a good candidate for it. Talking to an expert is imperative. And so we want to invite you to reach out and have a conversation with Justin and his team. All you got to do is text the word REFI to 623-AZ-RECON. That's REFI to 623-AZ-RECON. So obviously there's the process is different from, between me going out and buying a home and getting a mortgage as opposed to I have a home, I have an existing mortgage, and now I want to do a refinance. For those that are going to text the word REFI to 623-AZ-RECON, what is that process look like? And it's so important to point out that they're not locking into anything.
Yeah.
We welcome the exploratory calls and just explore what those options look like.
Yeah. So what we start off the same way. We'll put together an application. We're going to do a soft credit check. The beauty of a refinance with the soft credit check is we're going to do the soft pull, and we're not going to pull a hard inquiry until we're getting ready to close. And the reason why we do that is we want to limit the amount of trigger calls that are happening to the clients. And it's more towards your benefit because your phone will just blow up. So what we want to do
if the federal government is actually looking for something to do that is useful, let's govern that.
Yeah.
The credit bureaus selling your information when someone pulls your credit.
Yeah.
I mean, that would be a good use of their time.
Absolutely. So what we're going to do is direct you to go to the do not call list, the national do not call list, and put your information in just so you don't receive 15 phone calls in the first 10 minutes, because that's pretty typical. And that just continues for probably the first 30 days. Mm-hmm. But we're going to get your application. And big piece of the process is I want a copy of your mortgage statement. One, so I can see the interest rate on the mortgage statement. Two, I can see what you're paying towards escrows, taxes, and insurance, so that I can give you a real comparison to your current mortgage and what we're looking at doing. And then I'll be able to break it down. Here's your cost. Here's your savings. It takes you this much time to recoup the cost of the refinance. Maybe we'll get an appraisal waiver on it. Maybe we don't even need an appraisal. So like a VA loan, if you're in a current VA loan, we can do what's called an IRL, interest rate reduction loan. It's beautiful. All I need is a mortgage statement and your current HOA statement. And I don't need an appraisal. I don't need income documentation. I don't need assets. I can put it all together and let you know exactly where you're at. Typically, our process for a refinance, if there's no appraisal, we can get you pretty much clear to close within 15 to 20 days. So we're typically looking at closing your loan. We're trying to close you depending on what you want to do. So if you want to skip 2 months payments, we're going to try to close you by the 15th of a month. If you're trying
I want to skip all my payments
Yeah.
and not get penalized.
I just want to pay it when I sell it.
Sure. If you're trying to skip one payment, we're trying to close you on the 30th of a month.
Well, one thing I do know, you can't give anybody any advice or help them in what they should do if they don't pick up the phone and text the word refi to 623-AZ-RECON. That's refi to 623-AZ-RECON. All right, Justin, just on a side note, another bit of news from my understanding, conventional loan limits have gone up.
Yeah. We have an estimate of $802,000. Now that's on a national level. You can bet that Maricopa County is going to be higher than that. So this is a big deal. I mean, we've seen year after year this conventional loan limit continue to increase, and they're actually responding. And when I say the investors are responding to the need of higher loan limits based on purchase prices in these areas. And it just makes things a lot easier and streamlined instead of jumping to private money in those jumbo loans. And it gives more opportunity for, future Fed programs within conventional programs. So I love it. I don't know what we're going to end up with for FHA, but looking good so far.
All right, well, there you have it. We invite you to reach out to Justin and his team, regardless of whether you're interested in doing a refinance or buying a home and needing the best rates and the best programs available. We encourage you to pick up your phone and text the word REFI to 623-AZ-RECON. That's REFI to 623-AZ-RECON.